Hey peeps, welcome back to another video. I'm gonna give you guys 9 tips for success in the forex industry. So guys, these are the 9 tips you will need for success in the forex industry. Before getting into that, please hit the like button, subscribe if you're new, and please turn on notifications not to miss out on our regular uploads. With that said, please share this video. Point number 1, greed is the main reason for failure in the forex industry. The forex market, the most reason why people fail is because they are greedy, and it's an emotion. We have greed, we have fear. If you can manage those two emotions, you can easily become successful in this industry. So when you're trading, make sure you learn to manage your emotions of greed and fear. Don't let them play over you. There are a lot of people, when they get into the market, they get so greedy with their trades, and because of this they lose money. They lose a lot of money. They want to keep making more. Let's say they get into a position and they lose some money. They start doing revenge trading. They start becoming greedy with their trades. Make sure you manage your emotion on greed when you're trading forex, or else you will end up being a failure in the markets. That's the tip number 1. Tip number 2, risking a big percentage of your trading account on a single trade, that's a no-no. Don't ever do that when you're trading forex, because I see many people, they risk a large percentage of their account on a single trade and they end up losing all their money in their account. Don't do that when you're trading forex. It's a common principle in forex that do not risk more than 2% of your account on a single trade. So make sure when you're trading, reduce your lot size, reduce your leverage, and don't over leverage your account. A lot of people have lost money from the forex market because they are over risking their account. So if they do one trade and the trade goes against them, they're going to lose all their money in their account, and it'll be difficult for you to recover that because your account balance is already down. So make sure you manage your risks when you're trading forex. Point number 3, set and identify monthly target and work hard to achieve it. So if you're having an account, based on your account, try to make targets and try to achieve them. Let's say if you're having a $500 account, you can set a target to make it to 1,000 or 2,000, depending on how good you are at trading. But don't set targets that are outrageous. Because you go online and you see those people do those things online, you think you can take a $100 account and flip it to 10,000. That's not realistic if you're a beginner in trading, and if you want to become a very successful trader. Trading is a long-term investment. So try to manage your account, try to manage your risks, try to manage your targets. It means if you're having a $100 account, let's say for example you're having a $100 account, you can flip it to 200, flip it to from 200, you can flip 200 to 400 during the month. From 400 you can flip 400 to 600 to 1,000, and it goes that way depending on your skills in trading, so that you don't over leverage your account, so that you don't over leverage your account, so that you don't over risk your account. It's very important when you're trading. Point number 4, the more you educate yourself about the market, the more you will love it and the more successful you become at trading. Most people, when they go and they study a course online, or let's say they go for a training, that's it. They take the strategy and they keep using that strategy over and over and over and over and over. But I believe that it's much important if you keep learning. Learning never ends. Keep learning about the markets, keep studying your strategy. So if you've learned something, keep learning it over and over again, or also go to other places, get new books, keep reading them over and over again. The more you keep reading, the more you keep learning, the more it expands your brain. You can have a general picture of the market. Also make sure you go for seminars, webinars, and see what these guys are doing. Network with people, teamwork with people, learn from their failures, learn from their successes, so that you can be able to avoid those mistakes they made when you were trading forex. Point number 5, choose a suitable regulated broker. It's very important for a forex trader to get the right broker, and that's why I use Exness. Exness is a very good broker, and they are regulated in Cyprus, so I know very well that they can't run away with my money in case if I want to like cash out my account. Many traders, they get into bad brokerage company, and these companies run away with their money. Be careful before you want to sign up to a broker, before you want to deposit money into your account, into your trading account. make sure you check the broker. Make sure you check the broker to see if they are regulated. Point number 6, take control of your emotions and never place trade based on emotions. That's the most important thing that people need to know in Forex. Emotions is what is killing people in Forex. They get emotional when they're trading. Like if they lose, they start revenge trading. If they win, they start over trading. Over trading and revenge trading are the killers in the Forex market. Make sure you manage your emotions. If you're angry, don't trade. If you're so happy, don't trade also. Make sure that when you're trading, you are disciplined. It means that you have a plan. You know your plans, you know your instructions, and you follow the instruction. If you're using the support and resistance, make sure you use that. If you're using the trend line, make sure you use that. Don't just get in, don't just look at the market because you're seeing big moves. You just get into those moves anyhow without even knowing what you're doing. Most of the times, those moves are the brokers or are the banks just playing around, and they will just make sure that it goes back down and it takes your stop loss. Be careful. Never use emotions when you're trading. Number 7, be patient, trust the journey, and know that trading is long-term investment. People have been brainwashed and have been fooled to believe that trading is just a quick way to make money on the internet. Don't flow with that. Trading is a business, and it's mostly a long-term investment. It means you are investing for the long term. Because you make quick profits doesn't mean that is all about it. Because you're making some profits, let it not shade you or blind your mind to feel that you can just take some money and just flip it quickly. Trading is not a get rich quick scheme, so please don't fall into it. Trading is a long-term investment, so make sure you take it gradually. Grow your account gradually. Follow your discipline, follow your principles, and don't just be in a hurry to make quick money from the internet. You may end up losing all that money. It goes back to emotions. Okay, that is it for number 7. Also, be patient when you're trading. Be very patient. Wait for trades. The best traders in the markets do not chase trades. They wait for trades. So make sure if you're trading and you don't find any trade, close your computers, go home, enjoy yourself. Do anything else. But don't just get into the market and get into trades without control just because you want to make money. You may end up losing those trades in the first place. Point number 8, never try to beat the market. Trade smart. When I say never try to beat the market, trade smart, I mean don't try to be smarter than a smartphone. The market is very curly and very shady, so you cannot play over their minds. You can't play over them. They will eat your money. They will make you. When I say never try to beat the market, trade smart, I mean trade with a disciplined plan. Do not trade because you think that you are smart. You think that the market will fall down. No. Make sure you trade with your plan, and make sure you keep revising your trading plan. Make sure you keep revising your strategy so that you do not fall into a bad situation where your strategy is bad and you're losing all your money in the market. Point number 9, and that's the last point. If you're able and are confident enough to trust your trades, you should be able to spend your day calmly without checking your computer or your trades every 5 minutes. Most traders do that. They get so emotional. I mean, every 5 minutes, they spend their whole life on the computer just looking at their trades. It's not good. If you believe in yourself, if you've set your take profit, your stop loss, and your target 1, target 2, guys, close your computer, go enjoy yourself with your family, with your friends. Do something else. Don't get so attached or glued to the computer. It makes you to get so emotional, and you can find yourself closing positions that haven't matured. It's very important. So those are the 9 points which I think is very important for Forex traders to start implementing, especially if you're a beginner in the Forex industry. Anyways, what do you think about it? Leave it down in the comment section. Like this video. If you're new, subscribe and please share this video. God bless you. Bye.